Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, March the 8th, 2019. And this is the daily report for gold and silver, our weekend review. And what a way to end the week. A sizable pop in the precious metals, gold moving up about $13. And we've got a triple set of economic factors that are really changing the outlook of where the precious metals will go. Yesterday, the European Union announced that they will not be raising any rates till the end of the year. Their economy is soft. Today, the Chinese stock market had the largest single-day drawdown since October of last year. And then the third thing is the jobs report, estimated at 180,000 and coming in at a meager 20,000. Those three things collectively have shifted the market sentiment from risk on to safe haven assets. And we have certainly seen the results of that today. Let's take a look at our pricing. First to gold. Gold closing up $13.30 at $12.9940. We did send out a special trade alert, but we did recommend getting into the June position so that we would have all the time in the world that we need. We got in at around 13.05. Market closed at 13.0610. We'll look at that in detail, along with our current targets of resistance and support. Silver really shining today, up about 31 cents at $15.35. Platinum also trading higher on the day at $819.30. That is a $2.20 gain. The only precious metal to trade lower today was palladium. Palladium actually lost about $11 at $14.71. On today's report, I want to take a look at gold specifically and focus on that because we just put an active trade on. I want to talk about our targets for exiting and why we put our stop where we did, as well as resistance areas we might encounter along the way. Traders, what a phenomenal way to end the week. We certainly can say that today we saw a key reversal or a pivot as this market traded about $13 higher. We are looking at a daily chart of April gold, which is currently trading up about $12.70 at $12.9880. The high today was $13.0130. If you recall, all week we talked about the fact that we were definitely seeing consolidation in the market. The last 3 days prior to today's pop, we had these small bodied candles, these doji candles, that indicated that the basic bearish market sentiment had been waning because traders realized since the day after this market hit the apex, the highest trading point this year, this is February 20th, we have been in a defined and pretty steep correction. Now, the correction went past the 0.38% Fibonacci retracement, and all week we talked about that what would be necessary to actually pull a trigger and enter the market from the long side would be a pop in gold prices above this price point, and this price point being approximately $12.90 to $12.91. We certainly got that today. And that tells me that this rounded bottom that we saw is going to hold, and more importantly, it is indicating where this correction is terminated at roughly a 0.44% retracement, a little bit deeper than a 0.38, but nonetheless a very valid point for the retracement to end. Now, once we have seen this kind of a pop, we have to figure out where we might run into resistance, and most importantly, what we want to derive is what our exit strategy is. In other words, what our target is. So let's cover that part first. What I'm looking at in terms of this particular wave, and I'm going to go ahead and compress the chart just a little bit, but on this particular wave, I'm looking at it as a fifth wave. In other words, a very loose wave count, the way I have been viewing the market has been that it all started when the market bottomed back in August at 1167. We had a wave 1. From there, we had a pretty deep correction. That correction actually came to a 0.618% retracement, and that began this long extended rally, what we are labeling as a wave 3. Now, this wave 3 was tremendous because it took the market from roughly 1195 up to these tops at 1350, and then from there we entered a corrective period that I believe definitely ended today, and we saw signs of it occurring throughout the week with these small-bodied candles. So what we are looking for is to forecast where we believe we could see the market go to on this fifth wave. There's two basic formulas to do that. One of them is to compare wave 1 and wave 5 as being equal. The other one is to do a 0.618% extension of wave 3, and that's exactly what I've done. Starting from this bottom, moving to the top, and then we've started the extension at this point right here, which is 1280, and the 0.618% extension comes out roughly at 1375. So that is my target for this particular trade. Traders, lastly, I do want to take a look at gold through the eyes of the June contract, which is where we went long. We went long right about here at 1305. It closed at 1305.10, up $12.30. In terms of our exit strategy, it's still going to be the 0.618% extension of wave 3. I think that is most logical. And in terms of our stop, because that is one thing we haven't covered, we put our stop at 1287.13. Now that was based on yesterday's low, which happened to be the lowest low that came in during this corrective period. That would be this low that came in on Thursday. So we have our stop just below this price point, and we have our exit strategy or upside target at 1375. We will talk about this trade in detail, as well as various levels that we could run into some resistance throughout next week. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you on Monday for the next daily update and review. Bye-bye.